What if the money you know and use today becomes obsolete tomorrow? Stay with us till the end to unravel the answer. The concept of money, as we know it, has been continuously evolving since the dawn of civilization. The earliest form of exchange wasn't the crisp paper bills or shiny coins we're familiar with today, but a simple barter system. People traded goods and services directly, based on their needs and the value they placed on different items. Imagine for a moment trading a bushel of wheat for a pair of shoes or a cow for a cart. Sounds quite impractical, doesn't it? Yet it was the best solution available at the time until the introduction of commodity money. This was a significant step forward, where items with intrinsic value, such as gold, silver, and even salt, were used as a medium of exchange. This system brought a certain uniformity and stability that the barter system lacked. However, carrying around bags of gold or jars of salt was cumbersome and risky. Thus the evolution continued, leading to the invention of paper money and coins, which were easier to transport and store. This form of money, known as fiat currency, is what most of us use today. It has no intrinsic value but is backed by the trust and confidence of the people and the government that issues it. But as we know, change is the only constant. In the 21st century, we are witnessing another transformation in the form of digital currencies. With the advent of the internet and advancements in technology, money is becoming increasingly virtual. Cryptocurrencies like Bitcoin and Ethereum are gaining popularity, and the idea of a cashless society is becoming more of a reality than a distant dream. As we stand on the brink of another financial revolution, it's important to understand the potential advantages and disadvantages that the future of money might bring. The future of money promises a world of seamless transactions and financial freedom, but how? Let's dive into the advantages of what we call future money. It all starts with digital currencies. Imagine a world where transactions happen in the blink of an eye. No waiting, no lines, no long forms to fill. That's the beauty of instant transactions. This immediacy is not just convenient, but it also helps businesses to operate more efficiently, reducing the time and cost associated with traditional financial operations. And speaking of cost, let's talk about transaction fees. With digital currencies, these fees are significantly lower, if not completely eliminated. This is a game changer for small businesses and individuals who often bear the brunt of high transaction fees. But it's not just about speed and cost, it's also about financial inclusion. There are billions of people worldwide who don't have access to traditional banking systems. Digital currencies offer a way to bring them into the fold, providing a means for them to participate in the global economy. This is a huge step towards financial equality and empowerment. Transparency is another key advantage. Digital currencies operate on blockchain technology, which provides a public, immutable ledger of all transactions. This transparency can help to prevent fraud and corruption and promote trust in the financial system. And finally, let's talk about economic growth. With all these advantages, digital currencies have the potential to spur increased economic activity. By making transactions faster, cheaper, and more inclusive, they could stimulate trade, investment, and innovation on a global scale. These advantages paint a rosy picture of financial future, but it's not all sunshine and rainbows. While the future of money offers numerous benefits, it comes with its own set of drawbacks. Let's delve into the dark side. Our journey into the future of money is not all roses and sunshine. It's a precarious path fraught with potential pitfalls. One of the most significant concerns pertains to the risk of hacks. In a world where currency is digital, cybercriminals have an all-access pass to your wallet. With just a few clicks, your hard-earned cash could vanish into the ether, leaving you high and dry. Moreover, the lack of privacy is another significant disadvantage. Every transaction you make, every cent you spend, could be traced and tracked. The digital ledger, beneficial for transparency, can also act as an unforgiving spotlight, revealing your spending habits to anyone who cares to look. Then, there's the potential for misuse. Digital currencies could become the preferred currency for illicit activities, from money laundering to funding terrorism. The anonymity offered by certain digital currencies can provide a convenient cover for those with malicious intent. Regulatory issues further complicate the picture. Different countries have different rules, and some even outright ban digital currencies. Navigating this global regulatory maze can be a daunting task for anyone. Lastly, the risk of economic instability cannot be ignored. The volatile nature of digital currencies can lead to rapid changes in value, creating an unstable economic environment. Imagine your life savings halving in value overnight due to a sudden drop in the value of your digital currency. The lack of a physical asset backing digital currencies can make them highly susceptible to market fluctuations. These potential pitfalls make it clear that the future of money may not be as bright as it initially seems. The transition to digital currencies is like walking a tightrope. It's an exciting journey, but one that requires caution and careful consideration. We must not let the allure of convenience and innovation blind us to the potential risks. In the end, the future of money is in our hands. We must shape it wisely. With these advantages and disadvantages in mind, the future of money seems uncertain. What could this mean for us? Let's take a moment to ponder this. The very fabric of our lives could be altered by these shifts in currency. Everyday transactions, from your morning cup of coffee to your monthly mortgage payment, might look radically different. The way businesses operate could also transform. The advent of digital currencies could lead to new business models, innovative financial products, and potentially a more inclusive economy. However, this future is not without its challenges. The risk of cybercrime looms large. In a world where money is entirely digital, the threat of hacking and fraud becomes more pronounced. Safeguarding our financial systems will become paramount, and that could mean an increased role for regulators. Regulation, though often seen as a hurdle, could be crucial to ensuring the smooth transition to the future of money. Regulators worldwide will need to strike a delicate balance. Too little regulation might leave the system prone to abuse, while too much could stifle innovation and growth. Security measures will also play an essential role. Robust security protocols will be needed to protect individuals and businesses from fraud and theft. This could lead to a surge in demand for cybersecurity services, creating new opportunities in this sector. And then there's the global economy. As we've seen in recent years, the global financial system is intricately connected. Changes in one part of the system can send ripples across the globe. The shift to digital currencies could exacerbate these effects, creating new risks and opportunities. Above all, there's a significant need for education. As we move towards this uncertain future, it's vital that we understand the changes that are coming and how they might impact us. As we navigate this uncharted territory, it's crucial to stay informed and prepared for whatever the future of money might bring. Now, let's get back to our initial question. What if the money you know and use today becomes obsolete tomorrow? The prospect of our current forms of money becoming obsolete can be a daunting one. But as we've explored, the evolution of money is nothing new. From bartering with shells and stones to the gold standard to paper currency, and now to the dawn of digital money, the form of money has been in a constant state of flux. The advantages of this new, future money are clear. Speed and efficiency of transactions, the ability to cross borders with ease, and the potential to bank the unbanked. It's a future where money is more inclusive, more global, and more efficient. But like any significant change, there are potential disadvantages. Privacy concerns, the potential for cybercrime, and the fear of a digital divide, where those without access to technology are left behind. These are real concerns that need to be addressed as we move towards this new era of money. But here's the thing. While the form of money may change, its core function as a medium of exchange will remain. Money, in whatever form, is simply a tool we use to trade value. And as long as there are goods and services to be exchanged, there will be some form of money to facilitate that exchange. The future of money is not something to be feared, but rather something to be prepared for. It's about understanding these changes, adapting to them, and finding ways to navigate this new financial landscape. It's about ensuring that as the form of money evolves, we evolve with it, making sure that no one is left behind. So while the money we know may become obsolete, its function won't. The form of money may change, but its purpose, to facilitate trade, to measure value, to store wealth, that will remain. The future of money is here, and it's time for us to adapt and evolve.